Hi, everyone. Marty Becker here, owner and founder of Atlas Financial Strategies, where we specialize in asset-based long-term care, guaranteed retirement income, and asset protection. Today, in this short video, we're going to answer the question, what happens if I never use the benefits of my long-term care policy? So let's start this discussion with the fact the odds are stacked against you, okay? 70% of Americans are going to need some type of long-term care, okay? And that's according to longtermcare.gov. And keep in mind that long-term care doesn't just mean you're a vegetable laying in a nursing home somewhere. These policies are designed to help you stay in your home and have someone come in just to help you cook and clean a few hours a week if that's what you need, all the way to being incapacitated in the nursing home with 24-hour care, and then everything in between. Okay, so don't just think the only benefit you're going to get out of this is if you're confined to a nursing home. There's a lot more that these can be used for. But let's get back to the original question of what if I never need the benefit for anything? So this is the biggest difference between traditional long-term care and asset-based long-term care. It's an asset, okay? It's not an investment, but it is an asset that has value. So let's just say that we design your strategy for you to park a lump sum of $100,000 inside the policy. And that's just, instead of it sitting in the bank or your IRA, we park it with the insurance company instead. We can design the policy depending on the company that will accept you, okay, however you want, and set it up to meet any of the criteria that you see on the screen here. And if you never end up needing that money and you never use the long-term care benefit, all of the money plus any growth will be passed on to your kids or whoever your beneficiary is. So if you have a lump sum just sitting around that you know you want to leave behind, use that money to give yourself the protection from the market losses and the protection from spending all of that money, and most likely a lot more, for long-term care. Just park it at the insurance company. However, if we design the policy with a lump sum and a monthly premium to maximize the benefits, the lump sum will be passed to your beneficiaries, but the money paid to the monthly premiums will not. So we need to keep that in mind, okay? And again, this isn't the main purpose of these policies. It's for long-term care. It's insurance. But I can already hear some people saying that's not fair, that I don't get the monthly premiums back. Again, this is insurance. This is not an investment. It's no different than expecting State Farm to return all of the money you paid to them for your home or your auto insurance because you never wrecked your car or burned your house down. Okay, it just doesn't work that way. You're paying that money to transfer risk and get reimbursement if something catastrophic happens. In the case of State Farm, to your home or your car. That's it. That's why you pay that monthly premium. You pay it to take the liability away. So we are transferring risk to the insurance company for leverage that could pay you way more for your long-term care than you will ever put into it. And we're going to talk about the kind of leverage that you can create with one of these policies in another video. And remember, from the first video, you really only have about a 3% chance of your home burning down. You only have about an 18% chance of totaling your car. But no one balks at the idea of paying insurance premiums for those, knowing that the money's never coming back. But you do have about a 70% chance of needing some type of long-term care that could cost you hundreds of thousands of dollars of your own money. And some people get butthurt that the monthly premium won't be returned. And again, that's if you even agree to have a monthly premium. You can do it with just a lump sum. A quick question I want you to ask yourselves: is it a ridiculous idea to park some of our money in a policy and maybe pay a little extra per month to maximize the benefit for something that we're going to have a 70% chance of using at some point in the future? No, it's not. And again, if you never use it, the lump sum of money is going to be passed on to your beneficiaries. It's really the best option available in the space of long-term care or financial planning. And keep in mind that long-term care planning is financial planning. So everyone, I hope that helps. And I want to thank you for taking the time to watch this video. I want to highly encourage you to watch the rest of this video series, then book a short phone call at atlasannuity.com so we can design your customized policy.